Looking across those other metals, Matt has also given me some caution into a trade that I was looking to take here in the week.
It should give you caution.
Look at
It should.
XME. Look at XME
Sure.
here, real quick. You know, one of the stocks on the stock report was this ETF XME, which is the metals and mining ETF. I was fully prepared. It was one of the things that I had targeted coming into the week for a breakout. We did catch the breakout, but now I got a funky candle, and I've had market volatility since the open, so I haven't pulled the trigger on this. I mean, Matt, you know, you are the technician, you know, that knows how to talk about triggers and all that kind of stuff. How does somebody like me approach this situation when maybe I didn't play it the way I wanted to? It's now gotten me some funky price action, but I am technically breaking out. I mean, what do I do
No,
here?
you are technically breaking out. Now, obviously, you're not in this trade. So what I would suggest, Tim, is number one, you did not have the technical scenarios to have a clean trigger on an aggressive trade here. So you should not have been front running. You should have been waiting for a confirmation candle, in my opinion.
Yep,
Now,
and
that
that's
is
what I was
just my
doing.
opinion.
Yep.
Others would disagree with me, but to me, if you're going to front run, you got to have a better environment than what XME is looking at. That's just my specific opinion, and it's because you don't have a very clean trigger. But now you got to look at it. You're saying, okay, I do like the price action. This is a Cody special. Breakout, snapback, test the breakout channel. And that's what you're seeing on XME. And when you see that, Tim, you have to be systematic. And if you look at that daily chart, you're going to be like, oh, that is just ugly. And you're right, it is ugly. Absolutely. But what creates that degree of ugliness? What creates that degree of ugliness, if you look at the intraday chart, is a lot of price action coming in on the overnight, forcing the market to open up at a higher price. It gets caught in the circus of the market. XME got caught into the circus of what happened on the cash open, the same way everything in the market did. Literally every single instrument in the market on the cash open, outside of a few, right? Tesla was up because it's Tesla and no other reason. You know, there was a couple other stocks up early on in the day. But for the most part, most of the market, look at any sector, look at any industry chart you need to, all got caught up in the selling of the cash open. XME did the same thing. The difference is this: whereas the market is now fighting to find some support levels, XME is fighting for that breakout channel. And that's why Cody loves those little snapback retracements. Now, typically he likes to see it on day two, not day one, that we're seeing here today, but the analysis is still fairly similar. What you're looking at now, Tim, is you got to drop this down into that 15-minute chart. You got to drop it down into the 30-minute chart, and you got to look at this from an intraday perspective. And you're saying, okay, the market's fighting for support. If the market finds support, you got to obviously believe XME will find support. But because of the strength in XME, the sell-off is now coming into the breakout channel versus the overall weakness in the broader market. So you're looking at this: can this market reclaim that 3560 level? That 3560 level on XME would be an intraday level that you would be a little concerned about. But for me, it really starts at 3380. So 3380 would be an updated trigger for me on XME. Yet nothing on the breakout you're looking at. You got to completely update that because it's now a failed breakout, and now you're looking at it as a snapback retest of the resistance level. So underneath 3380, Tim, you got to be a little bit concerned. It is forming support between 3340 and 3360. That's a positive thing, but you can't touch this, especially if you look at it on a 1-hour chart. That 1-hour chart cleans it up really nicely. You got a very good trigger right up there north of 3380. So I would update this one, Tim, because there's some stocks on those watch that need to be canned this week because they just violated too much. This is not one of them. I would be updating this to see how this market specifically on XME handles that snapback retracement coming into 3380. That's the resistance level that I need to see the market reclaim. So let's see how it fights for support underneath 3380. The trigger would be above 3380 for me here.
Mm-hmm. Yeah, and I love that technical breakdown because that's exactly what you need to do out there. If you're a trader, I mean, if your daily candlestick chart is not giving you the information to be able to completely map out a trade, you have to go down to the intraday and find those different levels. I appreciate you doing that for me there, Matt, because this is one I'm still targeting, and I'm looking forward to if I can get the price
I
action
like the
to confirm.
3380. It'd be an aggressive entry on a day trading.
Mm-hmm.
It would be a day trading technique that you're actually looking at a swing trade to hold 2, 3, 4 days, right?
Mm-hmm.
But I still think, regardless of whatever happens underneath 3380, if support does form between 33.4 and 33.6, that is fantastic. That just gets you ready to rock above 33.80.
Let's keep flashing through the broad
All I
market.
know is your
markets here.
analysis convinced me to sell a naked put down deep below, so I liked that.
My naked put would start at right somewhere in the $30 range. Where'd you go?
Oh, I went way out. I just wanted.
Oh,
to
you
pick
went
up
deep,
some,
deep.
I want. Oh,
You went deep
I sold
value?
a February 26 out on the old breakout level. Picked up $18.
You got your McRib's lunch money. I got Marcus McRib lunch money this week.